Perhaps you've heard the term CD annuity, and you're kind of like, well, what is that? And it's making reference, or it's equating a CD with an insurance company or a CD annuity to a CD at a bank. And what they're referring to when they use the term CD annuity is a multi-year guaranteed annuity. And in our lingo terms, MYGA, MYGA. And so why in the world would you even want to learn about this? And it's real simple that when you do a time deposit with an insurance company, there's one of these companies that's paying 3.35% interest on a 5-year deposit there. So it's certainly worth looking into. And a MYGA is really nothing more than a time deposit with an insurance company. And it's guaranteed by the insurance company. When you have a time deposit at a bank, it's guaranteed by the FDIC, the Federal Deposit Insurance Corporation. And so there's a clear difference here. And what we're talking about today is the multi-year guaranteed annuity. And the 3.35% over 5 years is where a lot of money is flowing into this. We have a lot of our clients that are putting money into this thing, some pretty substantial amounts, and even some in small amounts. We do sell other terms, and we have several clients that spread their money out, and they put some in a 2-year term and some in a 3-year term and some in a 5-year term, so that some of their money will be coming due every year, and then most of them just reinvest that. But it's a way to get back to what were some old CD rates. I mean, I'm sure many of you listening, you've got money in a checking account, or you got it in a money market account. You have it in an investment account where it's in cash, or perhaps you sold some stocks with the market decline, or you've got a bond portfolio. I mean, we just have a lot of sources of this, but people are generally not real happy about the less than 1% interest rates that they're getting from the banks and the brokerage houses on money markets. And these insurance companies, if you're willing to make a commitment of time, are going to pay you a very good interest rate, considering the times and what else is available out there. Now, if you went ahead with one of these things, you're going to get several advantages with it. Number one, in an annuity, there's no taxes on accumulated interest. I mean, it's tax deferred. So, in other words, if you bought this 5-year annuity and 5-year CD annuity, you're going to earn 3.35%, and you're not going to pay any taxes on that at the end of the year. Now, you are going to have to pay taxes when you draw it out. Now, you are able as well to just roll this money into a new annuity, so you can postpone these taxes, not forever, but close to forever. So that's one advantage. You also are going to earn this whole interest rate. You're not going to have sales loads, sales charges, commissions. The insurance company pays us to offer these things. You get the total amount. There's not a deduction from there for a sales load. You have no penalties on these if you wait to withdraw till the end of the period. So if you withdraw early, you're going to pay a penalty, of course, just like you would on any CD. Some companies offer withdrawal rights and riders, and what that means is you just give up a bit of your interest rate. It's a small bit, but in exchange for the right to take some of the money out every year if that was what you wanted to do, or you could have this interest paid out to you every month, and you're going to give up a little bit of the interest right on the front end to have those rights. These will accept IRA money. So if you have money in your IRA and you've got cash sitting in your IRA where you've sold some of the investments, you've rolled it over, and you want to get a more reasonable interest rate, we can handle that for you. Now, these are there's a lot of money flowing into these things. And what I wanted to point out, again, before we sign off, is what are we talking about here? We're talking about a multi-year guaranteed annuity, or MYGA, which is nothing more than a time deposit with an insurance company, with a large insurance company, and you're not getting FDIC insurance. So but it is backed up by the insurance company. Now at Cardinal here, we're in all 50 states in the District of Columbia. These products that we've listed here and this interest rate is not available in all states. So there's different states. We have something available in all states, but it may not necessarily be this. It's available in most states. We're CFPs, certified financial planners, fiduciaries, and a fiduciary means that, in all our dealings, that your interest as the customer is ahead of ours. We offer a lot of things other than MYGAs or multi-year guaranteed annuities. We offer different varieties of annuities. We're in the life insurance business. I'm a CLU, a chartered life underwriter. We do estate planning. We use life insurance to accomplish that. Medicare insurance, Medicare supplemental insurance, and Medicare Advantage insurance. We work with IRAs. The biggest problem with IRAs is you haven't paid taxes on them yet unless they're a Roth. And you need a distribution plan if you don't already have one. And we can prepare that for you and really get a strategy to minimize the taxes on the money coming out of that. We're in the long-term care insurance business and long-term care funding. So there's a whole variety of services that you can access if you just get in touch with us. I'm an author of a couple of books. You can find these at our website. You can find them on Amazon. I'm Hans Scheil, and I thank you for listening.